Hi, I'm Mike Alkin. I run a uranium-focused hedge fund called Sachem Cove Partners, and we're going to do some Q&A with three guys from the junior exploration space and in the uranium world, and we have Jordan Trimble from Skyharbour, Chris Frostad from Purepoint, and Craig Parry, who's the co-founder of NextGen and now the CEO of IsoEnergy. So we're going to get this going, and you talk about being at the tail of the dog, being in a industry that's been in a 7-year bear market, and then having to go out and be an explorer and trying to find stuff. And you still have to do your job. You still have to do what you're doing. But if we look back over the last decade, there have been 4 big deposits probably found in the Athabasca Basin. You had Rough Rider, you had Triple R, you had Arrow, NextGen, and another one that was
J-Zone.
Yeah, J-Zone, exactly. And if you think about how much was spent going into that, it was about $17 million per find it before you found it, and then you have to advance those projects, and that's $33 million. So that's about $50 million that go into finding it and then advancing the project. That's more than the market cap of each of these companies. So,
Thanks, Mike.
my pleasure. So what I'd like each of you to answer is, how do you think about this when you're allocating the capital? Because you have to go out and raise the capital, especially when you're in a bear market, it's tough. How do you guys think about allocating your budgets while you're in the exploration phase?
I'll start by just some context on that. There has been a handful of pretty major discoveries. For anyone that was at the lunch earlier, I talked about what Skyharbour is doing, and like my peers here, we're out there looking for that next big high-grade discovery in the basin. Technology and innovation, the way we actually go about finding these deposits has changed quite a bit, in particular in the Athabasca Basin in the last 20 years. So if you look at, for example, Rough Rider, which was in the kind of late 2000s, which ended up, it was call it $50 million to get it through to the first resource estimate, but it was ultimately acquired for $650 million, so that's a pretty nice return. But it took them quite a bit to actually go and find the deposit. Now, if we even go further back and we look at McArthur River, here's a good example of old school exploration, very, very capital intensive, and quite honestly, great ROI because it's that big of a deposit, but had it not been a world-class discovery, it would have been a bust. It was 200 holes, down to 500-600 meters to actually find this deposit. So now we fast forward to the current day, and you look at some of the more recent discoveries like NextGen, like Fission, even the Griffin deposit, which is another basement host deposit on the east side that Denison found recently. We're talking about less than $10 million from the initial reconnaissance through to the discovery hole. So that's a function of where we've come, the way we look for these deposits. Geophysical techniques have come a long way. You look at Fission, they use the radon gas surveys, directional drilling. You look at, and just the rocks that we're looking for these deposits in, right? The sandstone versus basement-hosted deposits, a lot of the recent discoveries being in the basement rock. So, for us at Skyharbour, look, we're out there looking for this next big deposit. We do have 2 deposits, one of which we're expanding. We're looking for more high-grade mineralization at what's called the Maverick Zone at our flagship project. But we really try to employ and use the cutting edge, if you will, innovative techniques to go out and decrease our discovery costs. So, for example, we flew a drone geophysical survey last year, which yielded these basement-hosted targets, new targets, and just in December we announced our first high-grade intercept in the underlying basement rocks that we're going to be following up on with this next drill program starting soon.
I don't know if this is working here. Okay. We, similar to Jordan's comments here, it's things have progressed a lot. I think over the last 10 years, we've seen a lot of the techniques change, but it's still a very expensive enterprise to get out there and find these things. I think we were probably in Patterson, we were close to $5 million, the joint venture, before we hit our discovery hole at Spitfire, and it's a lot of money. And I think the way we've had to go at it is we have 10 projects, but during the last boom we were able to spend quite a significant amount of money on them to hold them, And right now, to go out there and trickle $500,000 or $750,000 into some of these projects is, you just know it's not going to get you there. And that's been a challenge. I think, you know, we've been fortunate, the three of us up here, is that we have sources of funding so that we can put, you know, the right amount of money towards these projects that they deserve. But and in our case, we're focusing on a joint venture where we have Cameco and Areva or Orano as partners. So, you know, they're picking up a large portion of the freight. But it does allow us to put the required amount of, you know, the amount of money that it really does take to find these things, and it's not a small amount of money. It's been difficult for the whole sector and all of our peers, I think, to this point.
Good on you. Thanks, Chris. Thanks, Mike. Yeah, for us, you know, we take the approach of, I suppose, quite a technical, big company approach, if you like, to allocating our capital and prioritising our projects. So we typically go through, you know, when we spun out IsoEnergy from NextGen, we inherited some very good projects from NextGen. In fact, our number 1 and 2 targets within the NextGen portfolio sat on our Thorburn Lake and radio properties. So we knew we wanted to get in and explore those, but more importantly than that, we'd taken a model there from that Arrow deposit, you know, a new type of mineralisation that's never really been explored for in the eastern half of the Athabasca in any sort of systematic way. So we took that and, you know, we went through a ranking and prioritisation process of not only our own projects, but over 2,000 licences in that eastern part of the Athabasca Basin. And then worked out, you know, which of those we wanted to go after. I think we've now got 13 projects, which include a number of those top handful of projects we ranked and prioritised. And then we go through a very systematic process of looking at things on a quantitative, qualitative basis and ranking those and working through those targets. And, you know, that strategy's paying off. We recently closed a deal back in May this year with Cameco to acquire our La Roque East property off them. We ranked and prioritised one of the targets on those properties ahead of everything else we had at the time. Sent a drill rig out there in June, and sure enough, Steve Blower, our Vice President of Exploration, who's out in the audience there, reported back to me in June that we'd hit a significant mineralised intercept. So, you know, the strategy sort of paying off there.
Great. So for those who aren't familiar with exploration, talk to us about your highest priority project, walk us through the budgeting process, and how you determine a timeline until you find something, and when do you decide to pull the plug if you're going to pull the plug?
Yeah, so we have a dual-pronged strategy, as you're aware, Mike. You know, first and foremost, we are focused at our Flagship Moore project, which we acquired from Denison a few years ago. Now, this is a project that you know, we kind of had in our crosshairs since we started the company 5.5, 6 years ago, and finally were able to get a deal done on it. It's a project that's had a lot of exploration. My technical team, Rick Kazmersky, Dave Bayard, Christine, they've all worked on the project. They know it well. And we went in there with, you know, basically an exploration strategy that we wanted to go and carry out, knowing that the project had a lot of historical work. It had high-grade mineralization at the unconformity and in the sandstone, and as we've talked about, as Craig talked about here on the panel, a lot of these eastern projects just haven't been combed over. Despite there being a lot of exploration, they haven't been combed over for basement-hosted mineralization. So that was one of the things, as I've talked about, we're looking for. So then we go in and we look at the budget. And, you know, when you're drilling for, in particular, in our case right now, we're focusing in on the basement targets. These are a little bit deeper. So you do have to really be selective with your drill targets. You know, we don't have tens of millions of dollars to go spend drilling, so we have to be very selective. And again, it gets back to using what's out there, what's available, new techniques, new methodologies to refine these targets and basically decrease your discovery costs, increase your ROI. So we're really only drilling the absolute best targets that we have. Now, one of the other things on the project, and this was when we first started drilling it, this was really the main focus back in 2017, is we have a big long conductive corridor, 4 kilometers long. There's the small high-grade zone, the Maverick zone. We found additional lenses along strike. You find it's almost the pearls on a string model, as they call it. And we were able to go in and we went back and did a full reanalysis and reinterpretation of all the previous drilling that had been done there in the 90s and 2000s. And we went back and really analyzed the geochemical signature in these holes. And that actually led us to finding these new high-grade pods along strike. And they're relatively shallow, about 250, 260 meters. And that's also, again, that will remain an important target type that we'll be testing, because only about 2 kilometers of that 4 kilometer long corridor at the unconformity in the sandstone has been systematically drilled. So there's a lot of upside. There's all the basement rock below, which we're just tapping into now, but there's still about half that conductive corridor. And there's some regional targets on the project as well. So that's the flagship. And then when it comes to our second strategy as a prospect generator, one of the great things about employing prospect generator model and in our case, complementing what we're doing at our flagship, is you get to leverage the technical expertise of your partner. So it's not just our geological team. We're a smaller company. We can only hire so many geologists, so many people to look at the rocks and plan the drill programs. We have Uranium, which is France's largest uranium mining company, that's working with us. They're earning in 70% on one of our other projects. They have a big team of geologists and engineers that can look at that and they can provide their input, and they're the ones picking the targets at our Preston project. Same thing with Azincourt. They have their own technical team. They're earning in $4.5 million picking the targets. So it's working together with our partner companies as a prospect generator, and that helps us get our best targets picked and drill targets picked. And the benefit there also, they fund the exploration.
Well, 2 things. I think Jordan goes last next time. And 2, what was the question again? No. No, our prioritization is a little simpler, actually. You know, we've probably over the years, because we've been working at that for some time, we've been able to cull down a portfolio of 10 projects that we've probably spent in excess of $40 million on overall. But as soon as it became difficult to raise the appropriate amounts of money to do the work on this, we were able to dial that back quite a bit. So our focus and our priority, not just our top priority, our only priority right now is our Hook Lake project, because it's a project that it's got a lot of light on it right now. It's got a spotlight on it right now. We're adjacent to NextGen and Fission. We're all drilling into the same crack in the earth, and making some good discoveries out in that area, but it's also being financed primarily by Cameco and Orano. So as a 21% partner and as the operator, it's actually rather, it's very cost effective for us to emphasize that particular project going forward.
Yeah, good. Well, I think, you know, for us, in an ideal world, you would have an endless amount of capital that you could just keep systematically working through your rank of targets. I think in our company, you know, the bulk of our drill targets are characterised by known mineralisation. They're walk-up type drill targets. So we're in a really fortunate position there. So we'll work through those. I think, you know, it's probably of the order of $10 million to get through our full list of targets. But if you just focus on where we've recently discovered high-grade mineralisation at our Hurricane Zone, we were talking before, you know, that Arrow deposit that we've got there in NextGen, the high-grade zone of that is about the scale of this building, or this room in this building tipped on its side. So they're very hard things to find and quite narrow, so they need a considerable amount of drilling. We're spending about $1 million on our campaign to follow up that initial drill hit that we've had there. You can expect some results out of that, but that's $1 million. That'll give us a fairly good idea and understanding of where we're at and where we're going with that deposit, and then, you know, we'll expand from there. If that doesn't come up, though, you know, if we don't come up trumps there, then we've got a number of other targets, and of course the $4 million we've got in the bank, a good chunk of that will go to testing those other targets once we understand that deposit a bit better.
All this millions of dollars talked about being spent. How do you source these funds? Right, it's a difficult environment. How have you guys been able to source it and go from there?
Well, Yeah, look, we've been very fortunate because of that success of NextGen there. You know, my chairman, Lee Courier, the CEO of NextGen's been tremendously successful at raising. I think we've raised 250 million there in NextGen. A lot of that's come from Lee Ka-shing over the last couple of years. So that's set us in a very good position where, you know, we've got a number of investors that want to follow us with that track record and invest again. So despite the sort of depth and difficulty that this downturn's given us, we've actually raised $17 million in the past 3 years. So that's, you know, we're very fortunate to be in that position.
Great.
Yeah, I think similarly we've been able to lean on our partners quite heavily. Cameco and Orano have been very generous and very focused on this particular project to making sure that we're continually putting enough money against it to advance it properly. And to be honest, having them as partners and having the success we've had at that project has made it easier to go out in the market and raise money as well. So when we go out to find our share of the money that we need to keep things rolling, it hasn't been as big an effort as it could have been otherwise, for sure.
Yeah, I mean, in tough markets, you do have to get creative, right? It doesn't just come from one source typically, and you gotta be crafty with it. I mean, we've been fortunate. We've had some big backers really from day one. Marin Katuza and his fund have been a cornerstone investor. A few more recently, some funds. Thank you, Mike. that have come in, and globally too. And that's what's interesting. You know, we are seeing pockets of interest in this sector, and we can see that, you know, it's not all coming necessarily from Vancouver or Toronto, but there are pockets of interest. One of our largest shareholders is the largest bank of Hungary, and they have a resource fund, and they've been investing, and so we are starting to see, as we were talking about earlier, family offices and some smaller funds. Obviously in Canada we benefit having flow through, right? So a lot of exploration that can be funded through flow through, and then partner companies, strategic partners as well, and prospect generator. You do have some cash coming in when you option or when you joint venture projects off to your partner company. So it's a combination of sources, but yeah, no, it hasn't been easy, that's for sure.
Jordan, you mentioned sandstone versus basement hosted. A lot of work has been done sandstone and the unconformity, but now you're seeing the basement. For those who don't know what that means, can you walk them through that?
So full disclosure, I'm not a geologist, but this one's relatively simple to explain. But you can think of the Athabasca Basin. It was, you see it on the map, big circle in northern Saskatchewan, and it was a big intercontinental lake, got filled with sandstone. And so it's real simple. Just think of it as a big bowl. You have the sandstone there, the unconformity being the contact between the sandstone and the underlying basement rock. And so historically, a lot of the exploration's been carried out, and a lot of the development and production's been in the sandstone or at the unconformity. And it's been a couple of trailblazers really that have come in, you know, NextGen being a recent one, and that have found these big high-grade deposits in the basement rock. And at one point, the basin stretched out much further than what you see right now. So that's why you look at fission, which is actually outside of the basin proper. There's probably more discoveries to be made outside of the margin that you see, the current imprint that you see right now. So that's also, we have one project and actually a deposit outside of the basin proper, and there's probably more discoveries to be made there. But yeah, it's really kind of turned things over in the basin in terms of how we look for these deposits. It's a bit of a paradigm shift. And the other benefit too is when you actually go to mine it, it's much more competent rock, right? Now there are some new techniques that are being looked at, Sabre, ISR with Denison, that could bring the cost down for sandstone hosted deposits. But you know, basement hosted, we know you have competent rock, and in theory it's easier to mine than the wet sandstone.
You know, and I think it is interesting that we're now finding stuff in the basement rock, because it was never the approach historically. And I think a lot of companies, all of us here and others that are out there, are finding that we can go back to projects where there was discoveries before, but the techniques that they were going didn't allow them, or they stopped drilling too soon. And we've seen a lot of that in our particular case at Hook Lake. There's a parallel corridor called Dirksen, which was the largest mineralization find up until fission. And when we go back and look at the work that was done there, they were stopping just at the bottom of the basin. and they weren't drilling down any further. And what we've now seen drilling on projects in that area is that we aren't even starting to hit mineralization until we get about 50 meters below that point. So all of these drills are being stopped short. When we go back and look at them, they were just starting to get into stuff that would excite us now. And I think not just in our case, but in a lot of cases, there's a lot of projects in northern Saskatchewan where that are worthy of going back and taking another look and drilling with a different set of eyes these days.
Yeah, nice one. I think it's very, as a recent immigrant to Canada, it's all very exciting for my new home country, in that you can see from these basement hosted deposits that at some point in the next few years, Canada's going to regain its rightful position as the world's biggest and best uranium exporting country, and particularly Saskatchewan, where the government's so very supportive of it, because these deposits, as it turns out now, Arrow's shown, can be, they've got scale, but very importantly, they'll be the most economic and probably some of the highest margin mines ever built. You look at the Arrow pre-feasibility study, the numbers are absolutely spectacular. That project will occupy the first quartile of the cost curve at a cash cost of a quarter of the next best mine. So they're astonishing things, and we reckon there'll be absolutely more of those out in the eastern part of the Athabasca Basin, where the endowment of uranium is already massive. You've got McArthur River, Cigar Lake, some of the world's biggest deposits. There'll be others out there in that basement, and so getting in and exploring for those, that's absolutely the thing to do. They're great deposits.
Great. We're out of time. Thanks guys.
Mike.
Thank you.
Thanks, Mike.